Hey everyone, it is Julie here with TipRanks. Today we're taking a look at fintech stocks, specifically 3 companies that have buy analyst firm ratings. One even has upside potential over 100%. So we're going to take a closer look at each of these companies, what it is they do, and what analysts are predicting for their stock's future. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes and a jumping off point for your own research and due diligence. If you enjoyed today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Now with that being said, let's get right into these fintech stocks. The first company on our list today is Fiserv. Trading under the ticker FISV, they're currently priced at about $116 per share. Fiserv is a fintech company that aims at the service provider end of the market. They offer payment services, account and billing products, customer management, and online banking to credit unions, security brokers, banks, and retailers. Fiserv enables money movement for thousands of financial institutions and millions of people and businesses in a world that never powers down. They have 1.4 billion global accounts on file with 100 million digital banking users. They have 6 million merchant locations globally, 10,000 financial institution clients, and more than 12,000 financial transactions per second. They have the #1 market share and fastest growing core account processing provider for the $1 to $50 billion financial institutions, with more than $30 billion available for capital allocation over the next 5 years and a target of more than $60 million revenue synergy by 2024. Late in April, Fiserv announced their first quarter of 2021 earnings report. They had an adjusted earnings per share of $1.17, which was up 18% from the year-ago quarter. They had adjusted revenue of $3.56 billion, which was up slightly by 2%, and a free cash flow of $821 million, up 8%. They also had 5.2 million shares repurchased for $612 million. Looking forward to the fiscal year of 2021, they did update some of their targets. Now, for internal revenue growth, they're expecting 9 to 12% growth and adjusted earnings per share growth of 21 to 24%. One analyst covering the Fiserv stock is Dan Dolev from Mizuho Securities. And he acknowledges some mixed data from their earnings report, but writes, "We believe the positives far outweigh the concerns. Oddly, the cherry on top of the cake did not garner enough attention in our view. A 20-year agreement with Caixa, one of Brazil's largest banks, should be a top 10 relationship for Fiserv, adding north of 100 basis points to merchant growth over time. With Clover GPV accelerating to 36% in the first quarter, North America seeing low double-digit internal growth, ISVs growing 34%, and global e-commerce transactions up 24%, we believe Fiserv is simply executing better than many of its peers." The Fiserv stock currently has 16 analyst ratings, and it comes in with a strong buy based on 14 buy ratings and 2 holds. The average price target is $140 per share, which would be just over a 20% growth potential. All of those ratings being reiterated or assigned within the last 2 weeks following their earnings report. Our lowest rating is a hold with a 6.6% upside, most of them ranging in the low to mid 20% range, and our highest price target is from Mizuho with a $160 price target for a 37% upside potential over this next year. The second fintech company on our list today is PagSeguro Digital. They trade under the ticker PAGS and are currently at $42 per share. PagSeguro is part of Brazil's Universo online service, which is the country's largest internet portal. It was originally founded as UOL's online payment provider, but has since expanded to point-of-service payments. The company focuses on entrepreneurs, micro merchants, and small and mid-sized companies. In recent years, they have been moving into digital banking for individual online accounts. Now, in April, PagSeguro made a major move into the mobile market with the launch of their Pag phone. This is an Android 10 powered smart device combining functions of a smartphone, POS payment, and a digital bank. It's targeted at small entrepreneurs who need mobility. It accepts payments by credit card, debit card, Pix, QR code, and by approximation. Covering this stock for Deutsche Bank is analyst Brian Keane. and he sees a clear path for Pag, writing that their plans to move further upmarket and go after the fast-growing SMB opportunity, expecting to reach 250 to 300 hubs and 6 to 11% of total company volumes over the next year. Pag's guided to plus 40% volume growth in the fiscal year 21, which we believe could prove conservative. Although incremental investments, stimulus, and moving upmarket could weigh on take rate and margins, Pags should positively benefit from accelerated volumes. The PagSeguro stock currently has 3 analyst ratings, and they all come in as a buy for an overall strong buy rating with an average price target of $66, which would be an upside of 57% over the next year. The most recent rating comes in with a $60 price target, which would be a 41% growth potential. And third on our list today is Affirm Holdings. Trading under the ticker AFRM, they're currently priced at $53 per share. The company operates a loan via consumer app that allows purchases at any retailer. Affirm's consumer loans are detailed upfront, with the consumer knowing at the start how many payments will be needed and the exact payment schedule, and there are no late fees. Affirm has partnerships with Walmart and Shopify, showing the versatility of its model in both brick-and-mortar and online retail. Now, Affirm just had their IPO earlier this year in mid-January. Their launch saw over 24 million shares priced at $49, which was well ahead of expectations. Shortly after the IPO, the stock hit highs over $140 early in February, but since then, the stock has come down quite drastically. In February, they also released their first earnings report as a publicly traded company. The release covered the second quarter of fiscal 2021. Among the highlights in the report, there was $204 million in total revenue, up 57% year over year, $89.9 million in revenue less transactions cost, up 141% year over year, and 4.5 million active consumer users at the end of calendar 2020, up 52% year over year. The company also reported a 7% increase in transactions per active consumer. But despite the stocks slipping since February, analysts still see some serious growth on the horizon. And one of those analysts is Chris Brendler from Seaport Global. He sees the stock more attractive following the recent sell-off, saying, in our view, this underperformance comes despite increasing evidence that BNPL, or Buy Now, Pay Later, is going to be huge in the US, and based on a string of encouraging data points, we expect Affirm to materially exceed near-term expectations. The company offers financial options that let consumers pay in installments, and this trend seems to be reaching a hyper-growth adoption phase in the US, which could set Affirm up for success. We also want to be in front of Affirm's Shopify partnership, which has the potential to significantly accelerate Affirm's growth. Recent data suggests the wait is nearly over, and we expect management to provide an update on the upcoming earnings call. And that next earnings call is coming up in just a few days on May 10th. Right now, the Affirm stock has 10 current analyst ratings, and it comes in as a moderate buy based on 6 buys and 4 holds. The price target of $107 per share would be a 101% upside potential. Now, a few of those analyst ratings are 3 months old, and of course, we'll expect to see those reiterated next week after that latest earnings report. Our most recent one comes in with a $102 price target for a 91% growth, and the lowest is a hold rating from Merrill Lynch, which would still be a 46% upside potential. So there are 3 fintech stocks that analysts believe have some great growth potential in their future. Now, I always love hearing from you guys, so let me know in the comments down below what you think of these 3 companies and what other great fintech companies you have your eye on lately. As I said before, these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence before making any investment decision. If you enjoyed today's video, make sure you hit that thumbs up button, and don't forget to tune in tomorrow morning for my daily pre-market morning update, where I'm bringing you everything you need to know before the market opens. Thank you guys so much for watching. I hope you have a wonderful day, and we will see you back here next time.